Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. Well, in this installment, we're going to talk about pension plans. Two areas specifically we'll talk about. One is choosing survivor benefit options, and the second is dealing with the question around integration of pensions. I'll define that in a moment. Now, one of the things we're passionate about is the use and the development of retirement income plans, customized plans for individuals and their families to make sense of the multitude of decisions that have to be made as people begin to plan and transition into retirement. And so one of the ways that we can utilize retirement income plans is to focus in on the pension decisions and try to give people some clarity about how to handle their pensions. So that'll be the topic of this video as well. So if you're new to our channel, make sure you hit the subscribe button. We're posting content on the accumulation phase of retirement, saving for retirement, the transition to retirement, and then being retired. So if you don't want to miss that content, make sure you hit the subscribe button. Okay, first of all, let's just take a look at a really important area, and that's the decisions you're going to make. If you have a partner or spouse, you'll need to make survivorship benefit decisions, particularly on defined benefit pension plans. So let's take a look at that. Now, if you have a defined benefit pension plan through your employer, often referred to as a formula plan, and a formula for a really good defined benefit pension plan would be 2% times your years of pensionable service times the average of your best 5 career earnings in your employment there. Then when you do that calculation, if you get a statement, it might have it on your statement from the pension plan, or you can talk to your benefits department. But once you arrive at that number, then there's a second calculation, and that calculation is going to be the survivorship pension. So if you have a partner or a spouse, there is a requirement that you have a survivorship benefit on that plan, unless your partner waives their right to that pension, which is not usually the case. So let's assume that your partner is going to have a survivorship benefit. That means that if you die prematurely in retirement, then 100% or a portion of your pension will continue to be paid to your partner. Okay, so it's an important overall component to the pension plan. Now, if you look at this image here on the screen, I've just kind of sketched out the options. So typically, you've got a pension plan which there's no survivorship options. It'd be a single life annuity. Upon your death, as an example, all income would cease. There'd be no benefits that would go to the estate or survivor unless you have something called a guarantee period. I won't talk about guarantee periods in this video, but for the most part, if you die, then the pension dies with you. Now, that would be the highest form of pension income from your pension plan. I have this 60% or sometimes 2/3, which means that you get your pension plan, and then upon your death, your survivor will get 2/3 or 60% of your pension paid out for the rest of their life. So let's say you retire at 65, you live to age 72, and then that 60% or 2/3 will pay out to your surviving spouse at that point, and that will continue being paid until age 100 or however long your partner lives for. So it's a life pension over 2 lives. Now, when you do that, the pension income is going to drop. So high water mark would be the single life annuity, no guarantees to survivor. 2/3 would drop that pension. And what influences the drop is the difference in ages typically between the husband and wife. So if you have a situation where you're a male and you've got a female partner, and that female partner may be a lot younger than you, then you get really penalized because the pension plan knows they have to pay that income for a long period of time potentially. So if you're a woman and you have a male partner and life expectancy for males is going to be shorter from an actuarial standpoint, that means there'd be less of a drop in the pension when you choose a survivorship benefit. We then have 100% survivorship guarantees, and that means that if you got $2,000 a month from the pension plan, upon your death, if you died prematurely, your spouse would get the same $2,000 per month for the rest of their life, no matter how long they live for. Okay, so that's the basic overview. Now, where the planning comes into play is the idea of how much survivorship benefit do you actually need? And that question should be answered in the context of your retirement income plan. The retirement income plan takes into account your real estate holdings, your TFSA accounts, your RSP accounts, your investment accounts, so your total financial situation. And you shouldn't be making these survivorship benefit decisions outside the context of your overall plan. So as an example, you could have someone that goes, you know what, honey, I want to make sure you get 100% of the pension. So upon my death, you're going to get the same pension income, okay? What that means is you're going to drop that pension payment for the rest of your lives through your retirement. But what if that same person had maximized their TFSAs, had a large RSP balance, maybe had some open accounts, some real estate, rental properties? It's quite likely in that scenario that the spouse does not need 100% survivorship benefits, may only need 2/3 or 50%, depending on what the options are. So you don't want to lock yourself into a lower income for the rest of your life in a situation where the surviving spouse really didn't need that. In fact, if you're carrying life insurance policies, that could be additional value that goes into the estate. So you don't want to ignore survivorship benefits. Some people do need to lock in that 100% to their surviving spouse, because when you think about it, if you die, that's not the only source of income that could die with you. There'd be maybe old age security benefits that would be gone to the spouse. So as a couple, you both have old age security. Eventually, at age 65 starts kicking in. One of the couple dies, that OAS benefit's gone. If you then also reduce the pension by 1/3, that portion's gone. Probably the Canada Pension Plan overall payments to the family will be reduced as well. So they're not insignificant declines to the family cash flow. So some families may decide to go to 100% just to make sure that there's continuity in the cash flow over time. So the bottom line is, when you're making these survivor benefit pensions, do it in the context of the overall retirement income plan. You want to have sufficient survivorship benefits if that's a requirement, but you don't want to have more than sufficient if you've got other financial assets that the surviving spouse can rely on to produce ongoing income. Okay, so hopefully that's helpful for you. And again, if you are not subscribed to the channel, make sure you do that so you don't miss future content. As well, on the show notes to this video, there'll be links to very helpful resources. So if you do not have a retirement income plan, check out our link to our website, and it'll talk about how you can get your own customized plan. We also have another link to a retirement readiness resource bundle, packed full of videos, PDF documents, and planning discussions so you can get yourself ready for retirement. And then finally, there's contact information. You can click a link to start a conversation if you'd like to check out our retirement income planning services. Anyway, wishing you all the best in your wealth planning and your retirement planning journey. You take care. Bye-bye.